resume recording. I just want to remind everybody, I know that this is kind of old news, but still, just in case you forgot, the test and the quiz close tomorrow at 6 p.m. I looked at the stats and there are 11 people who have not yet done the quiz as of this morning at 10 a.m. and 13 people who have not yet done the test. There's only 17 or 18 people in this class, which means that the majority of people have not yet done the work. I know that you go according to your own schedule, but remember that this work has been available since last week, Tuesday. So if you're choosing to leave it until today or tomorrow, please just make sure that you understand that there are no extensions. So I wouldn't leave it too late if I were you, because normally that's when there's like some issues with internet, or you're moving so quickly through the thing because you're worried about time and the test closing, that that level of stress can cause a situation where you feel like you may not be able to perform at your best. So I was a little bit surprised this morning to see that 13 people hadn't even done the test yet. Again, it's your prerogative if you want to study and wait till the end to do it. Just know that by 6 o'clock tomorrow, whatever you've done at that point is what will be submitted. If you decide to start the test at 4 o'clock, remember I gave you guys 3.5 hours to do it. If you decide to start it at 4 o'clock, you'll only have 2 hours to do it. And if you can finish it in 2 hours, great. But if you can't, that's going to be something that you will have to accept, because I'm not extending the deadlines any further than what I already, I've already given a week's window where you could choose when you wanted to do it, including a weekend where some people may work on the weekend, so they can't do it then, but they can do it during the week and vice versa. So the hope is that by giving a whole week's opportunity to do it, that everybody will be able to find some time to do it. So I encourage those who haven't done anything yet to please start today, because again, tomorrow you may find that something comes up and suddenly you don't have the time that you would have hoped that you had. I'm sure you saw, I sent out a note on Friday for the early birds who had started, or I don't know if it was Friday or Thursday, I can't remember, but for the people who had started the quiz and the test, I received feedback, and Jaron, you gave this feedback, but I think at the time when you said it to me, I think we were in office hours when you said it to me, it didn't completely register with me how the system was behaving. I still thought it was behaving the way I thought it should. And then someone else also, I can't remember, one other person, it might have been Xiao Yi or Ying Yu or someone that emailed me to say that the system was also behaving differently to what we thought was happening. And I went into the quiz and realized that the way McGraw-Hill sets up their the submissions and the point deductions was definitely different to the way I understood it, in the sense that if you have a 10-question quiz, my expectation when I said that when you get a question wrong, if you take a second attempt, 20% will be deducted from your result. I meant that 20% would be deducted from the question that you are attempting again, which would mean that, for instance, let's say you got 9 out of 10 before on your first attempt, and you go back in and you fix the question that was wrong, you should then have 9.8 out of 10 if you get that question right. So 20% was only, in my mind, was going to come off of the question that you were fixing. But the way the system actually worked was that 20% was coming off of everything, regardless of whether you got everything right or wrong, which is in my mind completely insane, because what happens is they're treating the entire multiple choice, the 10 questions as one thing. So when you go back in for attempt number 2, there's nowhere in the system, and trust me, I looked back and forth, and I'm actually going to speak to the to the McGraw-Hill rep about this. There's nowhere in the system for me to be able to refine this further. And what the system is doing, which is completely insane in my estimation, is that when you go in for your second attempt, it was so the people who contacted me, they were having 20% deducted from the score that they had on questions that were already correct. So I completely changed the point deduction on the quiz, so that it would only be just 4% deduction from your grade, so that if you do one attempt and you get everything right, you can get 100%. If you do 2 attempts and you get everything right, you can get 96, which is still an A. And if you do 3 attempts and you get everything right, you can get 92, which is an A minus. That was in my estimation, with the constraints that I'm working under, the fairest way to do that. So I dropped the penalty from 20% to 4%. All right. So when you go in, those who haven't done this yet, which is a number of people, just be mindful of the fact that, you want to try as much as possible to just ace the quiz on the first go around, because on the second go around, the system is just set up to change the overall grade, and not to just change the grade on an individual question. And the same thing is occurring on the test. I was in correspondence with someone who was doing the test, that when they went in the second time again, I think they got 99 on the first attempt. And when they went in to fix something or whatever, the system counts the whole thing as one attempt. So you end up on 94. Please know, and the person asked me, can you keep the higher score? And I said, absolutely. So please know that I can see every attempt that you're making, and I can see the score that you're getting on that attempt. And I will be sure to keep the highest score, from some of the other publishers that I work with. So for instance, Wiley, the system keeps the highest score automatically. I don't know what's happening with Connect here, because it just shows me both scores, but I'll make sure that I keep your highest score. So let's say you do a first attempt on the test and you get 98, and you then the question becomes, does it even make sense to go in and try and fix something, because your score will drop to 94, right? Whereas, the people who are really struggling maybe, and they do a first attempt and they, have 80% or something, or 70%, it makes sense for them to go back in for a second attempt, because the maximum score that they could get is still 94. So I think the way to think about it is, if your first attempt on the test is higher than 94, it's not really going to benefit you to make a second attempt, because your second attempt will be 94 even if you get everything right, because of the way the system works. It doesn't penalize individual questions, it penalizes the whole test as one submission. And for the quiz, similar thinking. If you do your first attempt, if you get 9 out of 10, then you should go back in and try and fix whatever you need to fix, because your grade can still go up. If that's something that you want to do. I'm not saying that you have to do it. If you're comfortable with 9 out of 10, that's fine. I hope that makes sense. This is for me the first go around of doing testing in Connect for Intermediate 2. So I was comfortable to just drastically change the points, the point penalty from 20% to 4%. The test penalty had always been 6%. I think that personally, I wish that they would refine their system a little bit more, so that so that the penalty applies to the actual question. That was my impression based on discussions that I'd had with them. But I guess we were not speaking about the same thing. I think I've also been thinking I've also become so used to the Wiley system where they actually penalize per question, not for the whole test or the whole quiz. So if anybody still has mechanical, questions about the mechanics of what happens if you go in for the second attempt or the third attempt on any of this, you can speak to me during the break or speak to me after class. But I just, again, want to encourage those who have not started yet. The quiz counts 3% of your grade. Please do that first so that you can have an idea of maybe areas where you are getting stuck. I also mentioned, and I did write to McGraw-Hill, and they acknowledged that they got my comment that the question number 10 on the quiz doesn't give any guidance on rounding, like should you round to 2 decimals or no decimals, or what should you do, when many other questions do give guidance. And it turns out, and this is all in the announcement that I sent you guys last week. I mean, I can go to it. I can't remember what day I sent it. Thursday. All right. So I asked you to please read this. If you didn't see this, it means that you are not checking the email, your email address that's attached to Blackboard. So please make sure that you check that email address or that you check Blackboard for any announcements. So in question 10, there was no guidance on rounding. Again, we can thank one of your classmates for bringing this up to me. The person had rounded to 2 decimals, and when they did that, their answer was somewhere between $500 and $1,000 different from any of the answers that were on the sheet as options. So they said none of the above, and they got it wrong. And what the system did was round to no decimals, right? It's rounded to a whole number, which was kind of strange because in previous rounding guidance, the system guides you guys to round to 2 decimals for intermediary calculations, not final number. It normally says round to the whole number. So when you get to question 10, just note that the system doesn't give you guidance. You need to round to a whole number. If you can't remember any of this, that's fine. You can just go back to this announcement. And for the people who had, by that point, 2 people had already completed, 2 or 3 people had already completed the quiz. And I think out of the 3 people, 2 people had this issue, and I was able to manually adjust their grade. And the people who had done the quiz when there was still a 20% penalty, you can check. I don't know if you've checked already, but you can check on Thursday or Friday. I manually adjusted your grade so that you would be able to get back to the grade that you would have under the new point deduction system. All right. So I guess the benefit to those who waited to do this is that, you don't have to go through these teething problems. You now know, I guess, what to do and where some of the pitfalls are. Does anybody have any questions about the test or the quiz or anything administrative before we move into the material for the day? Any admin questions that you may have? All right, so, I'll assume on that note that most people are following what's being said here, and that you understand that the time that you have to finish this work is running low, right? So please make sure that you mark your calendar or whatever to remind yourself to do the work. And for those who, a number of people already finished with everything and maybe working on the draft part B of the term paper, next Tuesday is when you should be handing that in to me so that I can read it in advance of you being able to submit early. Remember, early submission is +5 points, right? Extra credit to encourage people to submit early so that I can also just get the grading done. I did include, because this is becoming a recurring issue when I read through the drafts of people's work, I did include on our Blackboard a sample of a paper that has been cited and annotated for APA standards. And I did that because I'm finding that a lot of people are giving me, the reference page at the end, which is great, but not citing their sources within the document, right? So I'm sure you guys understand what I mean, that if you have a source that you are using, and this doesn't just apply to this class, this applies to, any class where you're writing a paper and you're being asked to use a citation approach or a citation method, you have to include the citation for the information that you are using based on your research within your writing, right, in the paper and in the references sheet at the end. Because when someone is reading your work, if you're only including references at the end, there is no way for them to know where in the paper you are using that information, and it's an incomplete reference. I mean, I'm not at these levels of being, so drastic, but theoretically, someone could say that it's plagiarism because yes, you have a list of references, but you're not actually citing the work, because where in the paper are you using, these people's research or whatever. So please make sure when you are doing your work that one, you don't just, copy paste from the internet what people are saying. You have to paraphrase and make sure that you're actually digesting what's being said and write it in your own words. But you also, and by own words, I mean like paraphrase it to some extent. If you do have to quote something, that's fine, just use quotation marks. But more important than some of what I've just said is this notion that you have to put in parentheses behind whatever you are saying. You have to put the names or whatever of the resource. Even the annual report of the company that you're using, you will say Netflix annual report 2021 page 5 or whatever, so that you always want to be thinking that the person who is reading your paper should be able to go back to the source wherever you use it in the paper and find the information that you are referring to. Okay, so if you're struggling with how to cite this document, I took, this is actually, I give you, so you can go to the LaGuardia Library website. They have help over there. And there's also the online writing lab at Purdue University, which is a very popular site for helping with APA citation. But even if you don't have the time or energy to do that, you actually can just refer to this paper as a sample for how your paper should be looking, when you are busy using it, or not busy, sorry, busy writing it. And if you have, I know everyone's focused on the test right now, that's fine. I'm not going to spend much more time talking about the paper, but for those people who haven't, thought about the paper at all, it will be due on November 24th, so there's still time. Just plan so that if you have questions for me about it, that you have ample time before the due date, so that you can, ask me whatever you need to ask me. All right. So that's here, the sample citation, and hopefully that will be of use to many of you. Just highlights again, reminder that the test is 15%, the paper is also 15%, the e-portfolio that you work on every Wednesday is 10% of your grade. Each homework is 3%. Like, you're accumulating points as you go along. So you want to make sure that you're actually doing the work as you go along, because there isn't going to be some big test at the end where you'll be able to make up all of the grades that you've lost. The final exam is not cumulative, so it's got the same percentage as all the other tests, okay? Because the final exam is just on the last 3 chapters. It can't be on the whole class. It's too much work, all right? So please just be aware of how you're being graded in the class, so that it's not becoming a surprise at the end because you didn't do the homework or whatever, that you've lost almost 20% of your grade. At that point, there's not much that can be done. So those are some of the admin things. That was kind of a bad note to end it on. I feel like I sound like I'm scolding you. I'm not doing that. I'm trying to just be transparent to make sure that, so you guys have 4 or 5 classes, you have jobs, you have lives, you have kids, you have family members that have their needs. It's my duty to just from time to time remind you of what's at stake in the class. So please don't take it as, you better blah, blah, blah. Like, it's not that. You're adults. You can choose what you want to do. But, I don't want people to come to me at the end, and this happens sometimes, to say, oh, I didn't know. You did know. And I'm also reminding you, it's just a matter of making sure that you prioritize what you need to prioritize, and speak to me if you're having problems with anything. All right. So we're back in chapter 10, and there were a number of topics in this chapter, as I'm sure you recall. It's all about acquiring assets, whether through actual purchasing or, in this case, we're going to talk now about non-monetary exchanges. Then there's also building assets, and what do you do with any interest that is incurred on loans that might be related to money that we're using to buy or to build to buy the parts of the asset that need to be built to get us to the end. And so really, I mean, there's a little bit more. There's some research and development discussion, but the last two parts of the chapter that are left, the big pieces are the non-monetary exchange and interest capitalization. And interest capitalization especially is a little bit strange. Is probably the best way to say it, like the way it gets done. So you want to make sure that you have your, I guess, best thinking cap on while we go through interest capitalization. So let's first start with exchange of non-monetary assets. I know I read through some of the stuff on Wednesday, but obviously Wednesday feels like ages ago. So I'll just go through this theory that's written over here, and then we'll start looking at some examples, and then we'll try and reinforce some of the theory to make sure that we can connect it back to the examples that we've just seen, right? So the basic principle that we follow in a non-monetary exchange, and this was when I said to you last time, if you're driving, a 2019 BMW and you want to exchange it for a 2021, you go to the car dealership, they tell you how much your 2019 car is worth, and then they tell you how much extra you have to pay in cash, right, to get the new car. So that's what we mean by a even though it says non-monetary exchange, frankly, there is going to be money involved. Sometimes there's cash being paid out, in addition to whatever asset is being given up. Sometimes cash is even received. All right. So, so yes, it's non-monetary, but it's exchanging two assets, but you sometimes do have to make up the difference by paying or receiving cash. So we have to value the assets received at fair value. Okay. And it's not, they are formulas to determine what the fair value of the assets received is. It doesn't always just, you're not necessarily given the value of that asset in a question. And the amount can be based on the fair value of the asset given up or the fair value of the assets received plus or minus any cash exchanged. So again, this notion that you're going to say, what is the asset worth that I'm giving up? How much cash am I paying? That's probably the value of what I'm getting back. Or otherwise, they tell you what's the value of what you're receiving, and maybe you have to pay some cash, so you're able to figure out the calculation there. In practice, we expect the fair value of total assets received to equal the fair value of total assets given up in a fair trade, right? So it's like the old days of bartering or whatever, that you're hoping that even though it might be slightly different assets, or maybe it's the same asset, but in the end, the combination of the asset that's given up, maybe plus some money or whatever, is going to be equal to what we receive. If we're giving up an asset, we recognize any gain or loss for the difference between the fair value of the asset that we're giving up and the book value of that same asset. So for that BMW 2019 BMW that I was trading in for a new car, that the dealership will tell me what it's worth, which is the fair value of it. And I would have kept a book value of it. Let's say it was being used in my business, a book value being cost minus accumulated depreciation. If there's a difference between those numbers, I recognize a gain or loss. It doesn't matter if I paid cash or received cash as part of the transaction. The gain or the loss is calculated this way no matter what, right? The difference between the fair value and the book value of the asset that we're giving up. Companies immediately recognize losses they incur on all exchanges. This is classic FASB. They want you to record all losses. They want you to record some gains, not all gains. And the gains will depend on whether the exchange has commercial substance or not. And commercial substance is defined. It means that an exchange has commercial substance if the future cash flows of the company will change as a result of that transaction. So, they give a typical example, an exchange of some vehicle with different useful lives. If you exchange an old vehicle for a newer vehicle, there's going to be a change in the cash flows of your company. And so that's commercial substance. Whereas if you're exchanging two assets that have similar useful lives with no significant difference in the way that they perform, that is probably lacking. There's no commercial substance. And of course, with all the things that become super complicated, whether it be in accounting or in taxation or in some of the other business related subjects, it often becomes complicated because people engaged in some fraud schemes. So this notion of separating commercial substance and no commercial substance is to try to stop companies from having bogus exchanges just to recognize gains and push up their profits. That's why there's a limit on the recognizing of gains, but no limit on the recognizing of losses. If you look at any of the accounting theory, you always see that the accounting standards will say that losses should be recognized in the period when they're when they happen, when they're incurred. And we're following that. But gains, again, to try and avoid any sketchy behavior, any fraudulent behavior, gains are limited to commercial substance only. We've already discussed this. So if there's commercial substance, you recognize the gain. If there's no commercial substance and you don't receive any cash in the exchange, you also don't recognize the gain. And then there's this and I should have said this before, with most things that are complicated, there's also an exception, right? So there is an exception if there's no commercial substance, but someone actually gives you cash as well in the exchange, because then you can recognize some or all of the gain. Because what the thinking behind that is that if you are receiving cash, you're actually basically realizing the gain in cash. So you should be able to record some of that gain on your books. And this cash that's received is referred to as boot, B-O-O-T. And if there is boot, so let's say I'm exchanging my 2019 BM for a 2021 BM, and for whatever reason, maybe the value of cars has gone down. When I get the 2021 BM, I also get cash from the dealer, right? They pay me some cash. That cash is boot, and the amount of boot that I can recognize as a gain is determined by the boot formula. All right. And this boot formula we will implement in an example because it's, reading it in the abstract is a little bit overwhelming. But all you need to know is that up to a certain point, if we exchange an asset and we receive cash, but there's no commercial substance, we can actually recognize some of the gain depending on how much boot we received. Okay, so that's the primer, that's the background. I gave you a few things for the people who are, faithfully following along and downloading documents and stuff. Remember last time I said I had updated some documents. There is a handout for non-monetary exchanges where I actually, attempt to give you, the formulas and how to calculate the fair value of the new asset, how to work through the process of recording the journal entry and so on. I'll be referring to this as we go along. And then as part of this, I also put in the actual examples for non-monetary exchanges. Let me just make sure that it's here. I see the solution. Oh, the examples are in the updated handout for chapter 10. Okay, so the examples look like this. I think I put them in as question 21. They're right at the end of the document. These are the sample exchange questions. So we're going to work through these. I believe it's seven examples, and they'll give you basically every scenario that you can have in non-monetary exchanges. The hope then is that by the end of this, you would be able to see how the journal entry changes depending on loss or gain, commercial substance, no commercial substance, and then no commercial substance with or without this boot payment that I was referring to. All right. So the steps in trying to do the journal entry, I think I said before to you guys that it's like a disposal. You're obviously getting rid of an asset, and so when we think about a disposal, I'm actually just going to write in here, and we can just talk about it. So if we think about an asset disposal, so it's going to be, sorry, that's misspelled. So it's going to be, for instance, a sale or retirement or an exchange. Obviously, those are all the different types of disposals that we could have. Let's just assume that it is a sale, right? When you think about what needs to happen with any type of sale, you're obviously receiving some type of, let's call it cash, right? You're receiving cash, and you have to get rid of the asset from your books. You have to get rid of any accumulated depreciation from your books, and you have to recognize a gain or loss, right? So if there's a sale, you're going to debit cash for whatever amount, right, for the sale proceeds, whatever amount that is. You're going to credit the asset, right, because the normal balance on the asset is a debit, so credit to remove it from the books, right, because it's being sold. You're going to debit accumulated depreciation, and so it's kind of the same thinking that the normal balance is a credit because it's a contra asset. Remember, contra asset. So debit it to remove from the books. Those are the steps. So you recognize the cash, remove the assets, remove the accumulated depreciation, and then you either debit a loss or credit a gain, right? And you calculate that by saying, if the cash received is greater than the book value, that equals a gain. And if the cash received is less than the book value, that equals a loss. And so what is book value? I mean, I know some of this is just old news. I get it, but we need to understand all of these terms so that we can get through exchanges as well. Book value is defined. It's cost minus accumulated depreciation. So that's a sale, right? You receive the cash, you debit cash, you get rid of the asset, you get rid of the accumulated depreciation, and you either debit or loss or credit a gain, being the difference between what you received and the book value, right? So what's different now? Because look, we already know this from previous experiences with accounting. So the question you have to ask is, what's different with this when we come to an exchange, right? So with an exchange, obviously, there is no, sorry, let's not say no cash because there may be cash received, but we are receiving, right, a new asset. So we have to debit the new asset, right? You're still going to do this with the old asset. You're still going to credit the old asset, right? You're getting it off the books. Debit accumulated depreciation, and I'll put old assets so that you know what I'm saying. Debit the old assets accumulated depreciation, right? And then you still also have either debit a loss or credit a gain. But the way you figure that out is the fair value of the old asset. If it's greater than the book value, that's a gain, right? And if the fair value of the old asset is less than the book value, that is a loss. And then the question is, how do we calculate this, right? Because you're debiting a new asset, how do you calculate that? There's a formula that we will figure out to calculate that. And then the last thing that I'll say on this is there may be cash paid or received as part of the exchange, okay? It's possible that there could be cash paid. Oh, my typing is really not on point today. So there may be cash paid or received. So why did I do this, right? Especially if you were half asleep now while I was talking. I'm trying to show you that you already know some of what is happening here. You already know how to do a disposal with receiving cash and getting rid of the asset. In this case, it's also a type of disposal, but you're getting a new asset in its place. So the only thing we need to figure out is how do we record the new asset? We know that we need to credit the old asset and debit the old accumulated depreciation. And then we have to figure out, is there a gain or a loss? And there's a formula for that, right? It's the fair value of the old asset compared to its book value. And then if there's cash paid or received, obviously that's just going to be either a debit or a credit to cash. All right. So take heart that you know, a lot of what we're going to discuss may look a little bit strange, but it's actually things that you kind of know already. So with that being said, let's start looking at these examples. There's a loss with an exchange that has commercial substance. All right. So when an exchange has commercial substance, you can recognize any gains that come out of the exchange. Losses will always be recognized, right? Regardless. This is what we start. If the exchange has commercial substance, you recognize all gains and losses. So Bright Company exchanges a used truck with a cost of $20,000 and accumulated depreciation of $2,000 for a new truck. Right? The fair value of the used truck, has been determined at $15,000, right? The fair value of the old truck is $15,000, and Bright also pays $2,000 cash. So the company is getting a new truck. they're giving up their old truck and they're also paying 2,000. So if you just read this question, you can already see it must then mean, right? If you've ever done a trade-in on a car, it must mean that the new truck is worth 17,000, right? Because the dealer probably said, yes, this old truck, 15 grand, but then you still have to pay me an extra 2,000 to get the new truck. So yeah, we see that, and I'll refer to the handouts, right? Yeah, we see that the formula for the new asset cost is the fair value of the old asset plus any cash paid minus any cash received. And in this case, you don't receive any cash, you only paid. So 17,000 is going to be the new truck's cost. Prepare the journal entry to record the exchange for pride company. So this I listed as a question as example 21 at the end of the chapter that I updated. Let's do debits and credits over here, so there's enough space to do everything. Okay. Sorry, let's just have some water. So if we think back on what we were just discussing, we debit the new asset, so we're going to debit the new truck. I'll just call it truck new to keep track, right, of what I'm doing. It's going to be the fair value of the old asset plus the cash that was paid. So I'll do the calculation. If we get rid of this thing, yeah, I'll do the calculation on the side. New truck cost, fair value of old truck, 15,000. Remember, this is formula driven, right? Plus any cash that's paid, cash paid, or, oh, this is gonna look like a formula. Let me fix that. Okay, and minus any cash received. If there is cash received, it's most of the time it's either or. There's rarely gonna be cash paid and cash received. So 2,000 is what we paid, 0 is what we received. I'm just keeping the whole formula just in case there's ever, cash received. So I'm going to add this up, and obviously it comes to 17,000, which then becomes the cost of the new truck. I know you could see that off of the question, but I'm just being, very thorough here. And then we're going to debit. Remember, we debit accumulated depreciation. We already discussed this. So we'll keep the debits in line with each other. So accumulated depreciation is the debit based on the question, right? The accumulated depreciation is $2,000. Again, if you're looking for the question, I updated the handout for chapter 10, and the question is right at the end of the list of all the questions. If you don't have the updated handout, you just need to download it from Blackboard. All right, so we've recorded the new asset, we've debited accumulated depreciation on the old asset. We need to credit the old asset now because we're getting rid of it. So the old truck is out, and if we go back to the question, we know that it had a cost of $20,000. So I'm going to credit $20,000, right? Now, I also know that I paid cash, so cash goes down by 2,000 on the credit side. And then I have to see whether there was a gain or a loss, right? How do we calculate the gain or the loss? We were told, I mean, I wrote it here, but we were also told in the theory that the gain or the loss is the fair value of the old asset, so the old truck, versus the book value, right, of the old truck. So fair value of the old truck versus the book value. We go back to the question, we see that the fair value is 15,000, right? So that's going to be kind of what we received, right, in exchange for the new truck. So 15,000 is the fair value of the old truck. The book value of the old truck, right? Remember we said that book value is defined as cost minus accumulated depreciation. So the book value is the 20,000 cost minus the 2,000 accumulated depreciation. So we can already predict what's going to happen here. There's going to be a loss here because what we're saying is you had something on your books that you thought was worth 18,000, but when you took it to the dealership to get, a new truck for it, they only gave you a value of 15,000. So that's a loss because the fair value that you got for the truck versus the book value that you carried at comes out negative. Another way that you could figure this out is 19,000 on the debit side and 22,000 on the credit side. Debits and credits have to balance, right? Dollar amounts have to be the same. So there's $3,000 missing here. And remember, a loss is a debit. So this is going to be the loss on exchange or the loss on disposal is going to be a $3,000 debit. Obviously, it would be much better if all my debits were in a line, but I left the loss calculation to the end so that you guys could see how we work through all the different steps, right? So I guess the two big things are, how to calculate the new truck cost and how to calculate the gain or the loss. Does anybody have questions on this, on what I just did? Okay. So now I'll hand it over to you for the gain calculation. You guys, I'll read it with you, but then you guys can take some time to see if you can calculate a gain, an exchange at a gain. Remember, it's commercial substance, so you are allowed to record the gain. Bright Company exchanges a used truck. This sounds familiar, right? But the cost now is 30,000 and accumulated depreciation of 28,000 for a new truck. The fair value of the used truck has been determined at $10,000 and Bright Company also pays $3,000 cash. Prepare the journal entry to record the exchange for Bright Company. So I'll give you 5 minutes until 11:28 to do the journal entry, and then I'll have someone can raise their hand to walk us through the journal entry that they came up with. Again, if you just joined or you are concerned with why it's so quiet, you're doing number 2, the journal entry, and we'll have a volunteer walk us through it.
Professor,
Yes.
where I find this document? I do not find this one.
All right. So let me show you again what I was saying. If you download this document that I updated on the 19th, I don't know, this computer's a little bit weird, so I don't know if the document will actually open. Okay, it did. If you scroll on this document right to the end, there, these are the examples. All right. So I repeat this document, download it. The last page at the end has the questions.
Okay, Professor.
Okay. All right, so we're coming close to time. I'll give you 1 more minute since it seems like some people, oh, and Tora, okay, so are you ready? Let's give 30 seconds more, and Tora, before I take your answer, since it sounds like some people didn't know where to find the question. So I'll call on you at maybe 11:29, okay? All right, and Tora, so walk me through what you want me to do here for number 2.
The journal is first one accumulated depreciation, debit 28,000.
So we're starting with accumulated depreciation. Okay, just hang on, let me bring the debit and credit down here. All right, accumulated depreciation. Depreciation, you're getting rid of it, you're debiting 28,000. Great. What else?
Yep. New truck, 10,000 debit.
How did you calculate the cost of the new truck?
It says here like for the used truck is 30,000 and cash is 3,000. So new truck is at 10,000. I got something for new truck.
So is it just 10,000? Because remember the fair value of the old truck is 10,000, but did we pay any cash?
Cash for 3,000.
So if we look at the formula, right, you have to add the cash that you paid, subtract any cash received. This is for the new truck cost. So tell me, so now let's see again, based on this formula, the new truck should be?
13.
Because although the fair value of the old truck is 10, the
Yeah.
formula, like I did on the previous one, the formula tells us that, because basically what you're saying, I mean, even if you forget about formulas, right? If you're saying I'm giving up an old truck and they tell me it's worth 10,000, but they still want me to pay an extra 3,000 on top of that, then it means that the new truck has to be worth 13,000, right? Because that's how much I end up giving, that's the amount of assets I end up giving up to get the new truck. Do you follow?
Used truck is 13,000
I think you follow.
credit side.
Yeah, that's right. The used truck here, it's 30,000. Oops. Or my, sorry, my typing is going crazy here. 30,000, yes. Cash,
Cash credit 3,000.
yeah. Now what? Gain or loss, right? We ask, is there gain or loss?
Gain.
Okay, so I'm gonna put it over here. Is there gain or loss? What was the fair?
3,000.
Thank you. What was the fair value of the old truck is 10,000. The book value of the old truck is 30,000 minus 28,000. 2,000. So you're absolutely right. The gain, it's a gain because what we are getting for our truck in the market is 8,000 higher than we thought it was worth in terms of book value. So the gain is a credit. So gain on exchange or gain on disposal, however you want to call it, you say 8,000. Do we balance? 41,000 and 41,000. Yes, we balance. So we could have also plugged the gain if we didn't know how much the amount was. We could have just said, okay, we've got 41,000 on the debit side and only 33,000 on the credit side. So it must mean that the gain is 8,000. All right. Well, thank you, Antora. That was good. I think hopefully going through this also reinforced for everybody that you just have to remember that the cost of the new asset as to be equivalent to, the fair value of the old one plus any cash paid or minus any cash received. Any questions there on anything, folks? Okay, so let's take a break here. We'll come back at 11:44. During the break, if anybody has questions for me about anything, you're welcome to ask. So 10-minute break, we'll come back at 11:40. I'm not sure when the clock is going to change over to 34, so I'll just give you extra minute, 11:44.